Listen to me. If you are approaching retirement, or if you are already there, the way you handle your money cannot be based on guesswork. It cannot be based on slick marketing. It has to be based on absolute certainty. You have spent decades working for every single dollar, every single euro, and right now, your primary job is to protect that money. So when you hear about a trendy, app-based financial service like Revolut, and you see people using it all over Europe, you naturally ask a very fundamental, very smart question. Is Revolut actually a bank in Germany? Is it a safe place for a retiree to put their hard-earned money? Let's strip away the fancy smartphone app features and look at the cold, hard facts. Yes, Revolut is officially a bank in Germany. It operates through its German branch, Revolut Bank UAB, Zweiniederlassung Deutschland. It is fully authorized by the European Central Bank and supervised by the Bank of Lithuania, and because it has that official branch right in Berlin, the German financial regulator, BaFin, supervises its local operations too. For new accounts opened in Germany, they even provide a local German IBAN starting with the letters DE. But just because something has the legal title of a bank does not mean it is the right bank for you at this stage in your life. You see, the fear that keeps retirees awake at night isn't just about whether a company is legal, it's the fear of losing access to your money when you need it most. It's the fear of a computer glitch locking you out of your account, with no human being to talk to. And that is where we need to have a serious, honest talk about how Revolut works, because its biggest strength is also its greatest danger for someone relying on their savings. Think about what you need from a bank during retirement. You need reliability. You need simplicity. And if something goes wrong, you need to be able to look a human being in the eye, or at the very least, talk to a real person on the phone to get it fixed immediately. With Revolut, there are no physical branches. None. There is no storefront you can walk into when you're frustrated. And worse, there is no customer service phone number for you to call. If your account gets flagged, if your card gets blocked while you are trying to buy groceries or pay for a medical expense, your only option is to type into an in-app text chat and wait for a representative to type back. Imagine the anxiety of having your retirement funds frozen, and instead of speaking to a branch manager who knows your name, you are staring at a smartphone screen, praying that a customer service agent in a chat room answers you quickly. That is a risk that requires serious thought. Now, let's talk about the ultimate safety net, deposit protection. You must never, ever put your money into any institution unless you know exactly who is backing it if things go south. Because Revolut is a fully licensed European bank, your deposits are protected up to 100,000 euros. That is the law. But here is the catch you need to understand. That protection is backed by the Lithuanian statutory deposit guarantee scheme, not the German one. If Revolut were to go completely bankrupt, your money is legally safe up to that 100,000 euro limit, but you would be dealing with the regulatory authorities in Lithuania to get your funds cleared and returned to you. Is that a headache you want to deal with when you are supposed to be enjoying your peace of mind? Furthermore, Germany is a country that still heavily relies on cash. Many traditional German restaurants, smaller shops, and medical offices look at a smartphone app or a foreign credit card and tell you point blank, cash only. If you use Revolut's free standard account, they strictly cap your fee-free ATM cash withdrawals at a mere 200 euros per month or 5 total withdrawals. Go a single euro over that 200 euro limit, and Revolut hits you with a 2% fee on your own money. On top of that, you cannot deposit physical cash into a Revolut account in Germany. If you sell a piece of furniture, receive a cash gift from family, or like to keep a cash reserve at home, you cannot simply walk up to a machine and deposit it into your Revolut account. They don't allow it. So, what is the actionable takeaway here? How do you play it safe, smart, and protected? You do not make an app like Revolut your primary bank account during retirement. You just don't do it. Your pension, your primary retirement distributions, and the bulk of your emergency savings belong in a stable, traditional banking institution, ideally one with physical branches in Germany or a highly established local online bank like C24 or ING Germany, where you have robust, direct support under the German Deposit Protection Scheme. However, Revolut can be an excellent, powerful secondary tool. If you love to travel during your retirement, if you want to visit family across Europe, or if you regularly send money across borders, that is where Revolut shines. You can download the app for free, keep a small, controlled amount of spending money in it, say, a few €100, and use it strictly for its fantastic, low-fee foreign currency exchange rates and its seamless digital payment features while traveling. By keeping the vast majority of your wealth in a traditional bank and using Revolut only as a digital wallet for pocket change and travel spending, you get the best of both worlds. You get the modern convenience when you want it, but more importantly, you keep the absolute safety, security, and human customer service that you absolutely require to protect your retirement. Be smart with your money, stand your ground, and never sacrifice your financial peace of mind for a trendy app.